Now we enter into the part of the show where I discuss what I believe is important for individual investors, all of you, to consider before you make your investment decisions over the next few weeks. Here you can see we have three topics, as we always do. The first topic, central banks and inflation, seems to be always the number one topic, right? Listening for what central banks are going to say about their fight against inflation, especially the Federal Reserve. What are Fed officials, Fed governors saying? The second idea that I think individual investors need to focus on continues to be quarterly earnings. Quarterly earnings season most of it is behind us now. We still have the odd earnings report. Tonight, NVIDIA comes out, one of the largest chip makers in the world in the US. Their earnings will be key to the tech space tomorrow. But overall, quarterly earnings this past week, I think the important area has been retail. We heard from the likes of Walmart and Home Depot. What are they saying? And what can we glean from what they're saying with respect to the overall economy? And lastly, taking profits. Yes, I'm not saying that the stock market will not and cannot continue to go higher. But I think with the start of the year that we've had, plus some of these investment ideas that we've been speaking about over the past few months, I think there are some profits there that individual investors can be taking off the table. Maybe not selling all of the investment, but maybe just trimming some of the gains. So taking profit is something I think you need to consider. So let's start with central banks and inflation. Overall, I think we have actually a great chart which shows Canadian inflation and core inflation. The 12-month chart here will show you that inflation is coming down. The overnight rate now is 5.9. Well, the overall inflation rate now is 5.9%. And you can see that the Bank of Canada rate is actually getting higher. And you can see those two lines kind of coming together. And that's a good thing. When those lines actually meet, many people think that the Bank of Canada and the US Federal Reserve will stop raising rates. So we're seeing that here in Canada with our rate now under 6%. Inflation rate just came out under 6%. And it looks like we're at a 4.5% current overnight rate with the Bank of Canada, getting closer and closer. In the US, the Fed has continued to say that they're going to continue to raise interest rates. We've heard from some bank governors in the last week or two, and they're talking about seeing a terminal rate or final destination for rates above 5%. And this was something that we really hadn't heard before. We were anticipating originally maybe 4%, started to move higher to 4.5%, 5%. And now, most recently, Governor Bullard, the head of the St. Louis Fed, was on TV early this morning, and he talked about a Fed funds rate of about 5.4%, 5.3% in that range, the highest that we've ever heard it. So overall, I think you could see another couple of rate hikes between now and then. I also believe that the most recent pullback in the markets has happened over the last week, week and a half, because Fed officials have now taken up their expectations for higher rates above 5%. So once again, before you make your investment decisions, have a listen to what these Fed officials are saying. Where are they saying rates will end up? And I think from there, you can understand or factor that into your investment decisions. Factor that into how the market is going to behave and what types of investments do you want to make. Interest rate sensitive investments versus non-interest rate sensitive investments. Will banks win out, or do you want to keep buying technology? So understanding where central banks or what central banks are saying and where they believe interest rates will top out is key before you make your investment decisions over the next few weeks and even months ahead. The second topic that I think individual investors need to focus on, as I mentioned, is quarterly earnings. And we received two big ones this week. And these are basically two of the biggest retailers in the world and definitely in North America. And that is Walmart and Home Depot. And we have a few charts showing first Walmart. We can pull that chart up. Now, Walmart had fantastic earnings. They beat on the top line growth and the bottom line growth once they factor in expenses. They spoke a bit about how wages have gone up to try and attract new workers and to keep their existing workers. but overall, their earnings were actually pretty good, in my opinion. Stock sold off initially, but then rallied to end the day on a positive note. Walmart has said that they believe going forward, things are going to continue to slow. They're seeing their grocery business do very, very well, which is, I believe, one of the main reasons why their earnings were so good. But on other items, maybe higher margin items like electronics, for example, not seeing the growth there. They're predicting or anticipating the consumer to slow down the spending. So I think that initially caused the shares of Walmart to fall. But then once people really started to focus on how good Walmart is doing, stock really ran from there. Home Depot, which we have a chart of as well, they weren't as good. Earnings, I thought, were good, but not good enough. They spoke about increasing, again, wages, which really ate into their profitability. You look at their stock in and around $297 today. That stock was about $330 not too long ago. We're talking maybe a few weeks. And you can see the chart here. It starts to tail off when you get to the far right of the chart. But as you can see, well above 320 at a bit of a peak there not too long ago. And once again, the CEO of Home Depot has said that going forward, they see a slowdown. The consumer will slow down their spending. A lot of what many CEOs are talking about now is the average consumer or the average person spending on services versus goods. And we continue to see that. And that's probably why services or inflation in the services area has been stubbornly high, whereas pricing of goods has come down. So going forward, let's keep an eye on more quarterly earnings. I know Target reports next week, another major US retailer. Let's see what they have to say. Obviously, slightly different than Walmart, very different business than Home Depot, but we need to focus on the remaining big companies that are going to report earnings. I mentioned another one in a different area of the market, NVIDIA. We'll see what they say about their chips. And as we know, their chips are used to power artificial intelligence. The third topic I think individual investors need to focus on is taking some profit off the table. Perhaps shifting around some money from something that has done very, very well to something that perhaps hasn't done well as yet. I have two stocks here that I've been taking some profits off the table with. The first one, United Rentals. Now, some of you may not be familiar with United Rentals. I guarantee you've seen their trucks on the road here in Toronto or throughout the United States. United Rentals basically rents heavy machinery. Different than Caterpillar, which is more global. They sell heavy machinery. United Rentals predominantly North American, US, Canada, and they're more rental of heavy machinery, various heavy machinery, similar to even a Deere. And if you look at their chart here, how much the stock has run up over the past year or so, it's done phenomenally well. Earnings have been good. So this is a name that I've been starting to trim and take some profits off the table. The stock is still relatively well priced, so not too expensive. But I think with a name like this and the run that it's had, perhaps it's time to trim some of the profits and use that money to buy something else. Perhaps beef up something that hasn't moved higher as yet in your portfolio, in your current portfolio, or perhaps buy a new investment idea that right now looks cheap, has great earnings, and even pays you a bit of a dividend. United Rentals doesn't pay much of a dividend, so perhaps taking some profit here makes sense. Another name, Goldman Sachs. We have a graph of that as well. Goldman Sachs, as you can see, has had a run up in the last little while. The far right of the chart shows us that Goldman Sachs is near their highs. It wasn't long ago where Goldman Sachs traded above 400. It's now about 361, but recently it hit as high as 375. And again, I started trimming back some of the profits and moving that money into other areas. So before you make your investment decisions over the next few weeks, I think you need to look at what in your portfolio makes sense to trim back or to sell off some of those profits to generate some cash, especially if you don't have cash available in the portfolio right now, that you can then use to buy other names. If you're going to sell some Goldman, maybe you want to move that into the Bank of America, which has maybe a little bit more room to run. If you've made quite a bit of money in a name like Nvidia, which we don't have a chart of, but that has done extremely well recently, maybe you move that money into a different chip maker. So I think right now, especially with the market running as high as it did, as fast as it did at the beginning of this year, January, beginning of February, we've seen a bit of a pullback now. It definitely makes sense to trim some of the profits and move some of that money into other areas of the market, of the economy, that you think has not come back yet, and that will rebound in the coming months.